Welcome back to the channel. In this video, I'm going to talk about one major mistake that many business owners fall into, a trap that many people fall into, and it's a reason why many businesses fail. Now, yes, it's a common thread that you hear, 95%, 98% of businesses fail in their first couple of years. Now, a little bit of a fallacy, 20, 30, 40% fail in the first year, another 40, 50% fail in year 2, year 3, but I'm going to talk about how you can keep yourself from falling into this trap. Now, first of all, let's just be upfront and honest. The actual reason why, the mistake that many people make when starting a business or building a business and putting money towards that business is they use personal credit cards to finance things. The capital they use is their personal credit cards. And this is the biggest mistake that you can make when building a business. Reason being is when you make this mistake, if your business does not cash flow or does not make money right away, you are climbing an uphill battle. Because if you put, as we understand our credit report, if you put expenses on your personal credit cards, 30% of your score, 65% of your score is made up of two of the most important things: making your on-time payments and the utilization that you are using. So let's say you start applying to, you're a business owner, but you apply to personal credit cards, and then you plan on putting expenses on those personal credit cards. Let's say you just have $10,000 of a credit limit. And if you put anything more than $3,000 on that and you don't pay off in full, your score is going to tank. Your personal credit score is going to tank. And this hurts you because then you're not able to get additional capital when you need it. So if you're in a position where you're not making profit right away, right, then your utilization is going to tank your credit score. So most businesses don't survive long-term because of this. Because of this, at the same time, they lack access to actual capital needs. They misunderstand how much they actually need. And of course, managing that cash flow ends up hurting them or biting them in the ass. So high utilization tanks your score. It doesn't look good to banks when you're looking for loans or you're applying to other credit cards or business credit cards, and you end up getting denials. So you're not able to access capital. So this is the biggest mistake, putting it on personal credit cards. What you should be doing, just so you guys know, if you're on this video to make sure you're not going to fall into the 98% trap, you should be adding personal credit cards to build your personal credit so that then you can apply to business credit cards, right? Because business credit cards actually don't report to your personal credit report. So let's talk about it. Let's break it down. If you are in this situation or you're looking at starting a business, or maybe in the future you want to add personal credit cards to build your credit. You want to increase your comparable credit limits. Comparable credit limits is getting personal cards that have higher credit limits. Should be, 10K plus, but if it's 5 to 8K, depending on your credit, that's fine. But if you're getting $10,000, $15,000, $20,000 personal credit approvals, this is good. This is great, because when other banks pull your credit, they see that you can handle this on the personal credit side. The other key piece of adding personal credit cards before business credit cards is you're building relationships with specific banks. So this is why you might want to get a Freedom Unlimited or a Chase Sapphire Preferred. You're building a relationship with Chase, which is very advantageous, and they have multiple products of business credit cards. American Express, Hilton Honors Card, or the Amex Gold Card, right? There, you're building a relationship with American Express, who also has multiple business credit products at 0%, right? So you're building relationships. If you already have your credit built up, remember, don't utilize your spending on your personal credit cards, right? You do not want to put business spend on personal cards, because then we get in this situation of high utilization, and then you end up falling into the trap. Now, let's move forward with this. Now, let's say once you build personal credit or you have personal credit cards, what should you do? Well, this is how you give yourself a 2 to 5 year timeline, right? If it takes you a year or a couple of years to become profitable, because a lot of businesses, it does, you're spending money on marketing, right? You're doing a lot of things yourself initially. The way that you can do that is you want to apply to business credit cards after building up personal credit that have 0% for 6 to 18 months. Reason why you want to put your business spend on these cards is because business cards do not report to personal credit reports. So you can hold $20,000 of spend on there, and it's not going to report or hurt your ability to get additional lending or additional capital when you ask for it, right? And you only have to pay 1% to 2% of your payments. So if you have 20K on there, you're paying $200 per month. So it gives you leeway. It gives you time to invest in marketing, to invest in your business, to bring cash flow back into the business, to profit, and then pay those balances off without affecting your chances of achieving or getting capital later, or affecting, your personal credit, which is the most important thing. When it comes to business credit cards, those inquiries can be removed as well because they're not attached to your personal credit report. So the most important thing is keeping your personal credit intact. Now, let's say you don't make profit in that 6, 12, 18 months, and you still have balances possibly sitting on business credit cards. Now, I recommend starting out with, 30, 50, 75K of 0%. The amount you get depends on the relationship you have with that bank, as well as your personal credit report. If you guys need help setting this up, if you want guidance and understanding of the hundreds of banking data points and how to access high-limit credit cards with the banks on the business side, then reach out to me. If you want to work with me, my link is down below. I work with people directly one-on-one to be able to help achieve, $50,000 to $150,000 in 0% business credit and understand a lot of the other benefits outside of that. But with that, let's say you get $30,000 to $50,000, $30,000 to $75,000 initially, and maybe you have $20,000, $30,000 still left over. You weren't able to make as much of a profit back, but that 0% is going to be up. Well, this is what most people won't tell you. This is what most of the funding companies won't tell you as well. What you should have done during this time frame, a few months before or 6 months before your 0% was up, you should have created some relationships with maybe some local banks, some local credit unions, or some banks that have what I call balance transfer credit cards. A First Citizens Bank, a PNC Bank, Elon Financial Banks as well, US Bank, right? These are banks that you should have a relationship with because it's going to help your approval, but they have business credit cards that allow you to balance transfer balances from some of these cards over to these. So now you have 0% for another 6, 12, or 18 months at a 1% to 2% payment clip. So this allows you, it gives you another runway of 12 to 18 months to be able to make a profit. It also gives you some more capital to invest in your business. Now, if you did this on personal cards, a 0% personal card, your utilization would be super high and you wouldn't be able to access any business credit cards. You wouldn't be able to access any other personal credit cards. So you would be stuck in a position where you're paying super high interest on those cards. Your score is tanking and you wouldn't be approved for loans because your utilization and score are low. So now you're stuck in a position where you have to ask friends and family to be able to pay off that debt. This gives you another runway, and you can do this again in year 3 or year 4, depending how strategic you are with your approvals, right? So this gets you out of a hole because it's not showing up on your personal credit report, and it's on business cards. You've built relationships, and you were strategic about who you did that with. Now, because of that as well, let's talk about a third option. Let's say you don't want to utilize the 0% balance transfer cards. Or maybe you weren't able to build a relationship with those banks in time and you got a low credit limit or something of that sort. Well, guess what? Your personal credit is now still intact again, which allows you to apply to personal loans to then pay off that debt. Personal loans up to $50,000 at low interest rates because your personal credit, your score is still high. So you have options like Lightstream or American Express or SoFi, where then let's say you did have $30,000, $40,000 still sitting there that you weren't able to pay off with the cash flow or the profits of your business. Now you can pay that off with a loan at 6, 7, 8%. Now you're paying $600 a month instead of 24% interest on 30 grand a month, right? You're able to pay that off and now you can utilize a loan because your personal credit was intact, right? You kept your personal credit intact. You were responsible because you didn't put business expenses on personal cards. Now you're able to access those low APR percentage loans to pay off debt or use it towards your business. So why is this super important? Why should you guys be aware of this? Like I said, personal cards. Don't put your business expenses on the personal cards. This gives you a 3 to 4 year runway when you play it smart, when you understand this, so that you don't become a part of the 95% of businesses that fail due to cash flow management, due to illiteracy about business credit and loans. In this time frame, you've also built relationships with the personal credit cards. You have access to way more products, which gives you higher limits and options at business lines of credit once you build those relationships up. The first year, you could get 50 to 150,000. Year two, you could get another 150 to 250,000. Year three, you could access up to 500 to $1 million plus of funding for your business, right? This is super important. This is called the business credit flywheel. And so because of this, you were able to turn your business into a machine. You were able to get through the ups and downs of what happens when it comes to building a business. And you're able to create opportunities that allows you to create a cash flowing business and not kind of fall into that debt trap of personal debt on those personal cards. So that is why 98% of businesses fail, is because of this one mistake, just putting business expenses on personal cards. And now that you've been able to check out this video, you can stop yourself from falling into the same trap, building the right credit limits, the right credit report, access to business credit, understanding certain relationships in terms of balance transfer cards, and being able to understand a couple of loan options as well. So if you are a business owner, an upcoming one, a current one, and you want to make sure that you don't fall into the position of the business failing, you're someone that's making 6 to 7 figures currently, you don't want to fall into that trap, then feel free to reach out to me. I work with business owners looking to access capital, $50,000 to $150,000. Be able to actually get some consulting, like understanding what relationships you should build, understanding a lot of the benefits in terms of the travel hacking side. A lot of these funding companies, they'll just do it for you, but they won't kind of guide you in the right direction and point you in the right direction. That's exactly what I do. So if you're someone, you're already a business owner, or you're someone that wants to optimize your current credit profile so that in the future you can access business credit, then reach out to me directly with the link attached in the description. If you guys have questions about this process, any core pieces of this process and what to be aware about, please feel free to ask them in the comments down below. Hit like, hit subscribe. Love seeing you guys show up, ask questions, and I will see you guys on the next video. Appreciate it. Peace.